Hi, if you're new, welcome to my channel. My videos are about investments that anyone in the world can make, not just Americans. And what I'm really trying to do is I'm trying to change how investors think, especially about the stock market. People do far more research in buying a lawnmower than they ever do for buying shares in the company. I'll take a good hard look under the hood of the company, no pun intended, to make sure we're not buying a lemon. And hopefully this will save you a lot of time in your own research. Now, it takes me around about a full day to put one of these videos together. So if you please could like the video for me so I can grow and I can make more videos. Today we're going to look at one of the most actively traded companies in the world, Tesla. Did you know that Tesla is actually the most valuable car manufacturer in America to ever exist? And it is the second most valuable car company in the entire world behind Toyota. Now, when I say valuable, what I'm referring to is the amount of shares that Tesla have multiplied by the share price. I'm not talking about profitability, which I'll address later in the analysis. Tesla have some pretty ambitious goals, and I think that's what draws the general public's attention. Firstly, I'm going to talk about the products. So that's the cars, the home batteries, and then solar. Tesla have changed the stereotype about electric cars with well-designed and well-engineered models. Now, what was really radical was they were able to make an electric car perform like a sports car. Prior to Tesla, electric cars had the stereotype of being slow and weak, but they definitely changed the game. It is packed with very sophisticated tech, and it is probably the most technically advanced car that we have ever seen. So who doesn't want to drive the car of the future? Now, the Tesla Powerwall is an energy storage battery for the home, which is most helpful for solar panel users because they can store all their excess energy that they get from the sun for rainy days and at nighttime. This product is a logical product development for the environmentally conscious Tesla and their loyal fans. The solar energy side of their business is often overlooked by the general public, and this I think is a very interesting part of their business. Essentially, Tesla bought a company called SolarCity back in 2016, and what they hope to do is they're trying to develop solar panel roof tiles, which would be far more efficient than the normal solar panels that we have today. The potential for these tiles to capture enough energy so that you never need to rely on traditional energy sources again is very possible. But the solar side of their business has had a lot of problems in the past. The manufacturing plant that produces these solar tiles has had a lot of issues with quality control, and Tesla shareholders also even tried to sue Tesla, the company, for the purchase of SolarCity. Now, I'm not going to go into the details, but the solar side of this business has been plagued with issues. Tesla has also not really focused a lot of attention in this side of their business for quite some time, and they've lost a lot of market share because of it. But the solar side of their business has big potential if Tesla can actually get their act together, but so far it has been quite mismanaged. Now, secondly, there is the big Elon Musk factor. His sustainable future agenda, his controversial tweets, and his appetite to solve some of the world's biggest problems have made him a celebrity. He gives the impression that he's not even in it for the profits, that he's really just trying to make the world a better place. He is the heart and soul of Tesla. And with the growing generation of environmentally conscious people, he has really nailed the cool factor for a billionaire. He is the rock star of the CEO world, and the general public give him brand loyalty for that. And that is what I believe is the most valuable part of this company, the exceptionally strong brand of Tesla. If you own a Tesla, you're cool, you're smart, it's a pretty strong brand. Also, journalists know that Musk and Tesla titles are great clickbait for their articles, and this just feeds into the popularity of Elon Musk himself and the brand. There's so much noise around him and the brand that millions of people idolize him throughout the world, and that people really follow his vision for a sustainable future. And honestly, I like the vision a lot as well. I think there needs to be a lot more people like him trying to change the world. More people trying to solve the world's biggest problems and taking gigantic financial risk just to improve the world we live in. I get it. I also think the brand is really cool. I think Elon Musk is a legend, and I think driverless cars are the future. Now, if you've watched a few videos of mine so far, you'll know that I'm really keen to see the financials of a company. On the surface, Tesla looks like it's going to change the world, and it has the leader to do it. But what do the financials say? Now, there are three key areas to the health of any business. Do they have too much debt? Are they growing? And are they well managed? Now, we want the company to pass all three of these areas, but unfortunately, it's a little bit of an art. And with a little bit more experience, you'll be able to understand what is critical and maybe not so critical. But you can just sit back because I've developed some general rules about each of these criteria that I've developed from the legendary investors of the world, of the Warren Buffetts, the Benjamin Grahams, and the Bill Ackmans. And if you want to know more about each of the particular ratios that I'm looking at, go back and have a look at my Facebook analysis that I've done because I go through it in a lot more detail. And as you watch more videos of mine, you'll start to get some experience in knowing what is critical and what is important, but maybe just a little less critical. Now, to get all this information together, I have to dig through Yahoo Finance, Morningstar, Macro Trends, and the actual annual reports of each of the companies that I analyze. So just try not to get too lost in all the terminology, because if you can just get the overall picture of what I'm talking about, then that's perfect. Can they handle their debt? It's really important to look at their debt because we want to know if the business was to completely stop, maybe for a fire in one of their factories or some sort of trade war happened, then we want to know that the business is going to be okay and it's going to get through this tough time. So to see if the business can actually handle its debt, I look at the debt to equity ratio and the current ratio. And I found for Tesla that they are in quite a weak debt position because I wanted to see the current ratio over 1.2. The current ratio has been getting worse over the years, which is making their long-term debt grow. This is weak because they're going to have to continue to raise money, but they've been able to do that successfully so far. But it has created quite a big problem because by raising more money, what they've done is they've actually diluted their previous shareholders. See, for Tesla, it's actually pretty easy for them to raise money right now. All they have to do is just issue more shares. Now, this is a big problem for the original shareholders because their shares are now less valuable. For example, if a company has 10 shares and then they decide to raise money and they issue another 10 shares, well, if you're one of those original shareholders, your investment has now been cut in half because you were a 1/10th owner of the company and now you're a 1/20th owner of the company. And shareholders, they generally hate this for obvious reasons. They've lost value. But Tesla has done this recently and they will probably do it again if they need more money. And as long as people believe in Tesla, well, then it's easy for them to just continue to raise money and dilute their previous shareholders. Are they growing? Now, we want to invest in a company that is growing, right? But 1 or 2 years of growth isn't really going to cut it. See, I think it's important to see consistent, long, stable growth. So to check for consistent growth, I look at the book value per share, the earnings per share, and the cash flow. And I found for Tesla that they are indeed growing. And the highlight would be their cash flow, which has just turned positive in the last 2 years. This is good because, well, at least they're making some money, but it's not that good because there's really no consistency here. But the earnings per share, well, this is all negative. So although they have got cash flow in the positive, they have not recorded a single year of profit. I actually went back through the books all the way back to 2003 when the company began and found they have actually never made a profit, ever. Just as a reference, here are the graphs from Google to compare good versus not so good. Notice the consistency difference. I feel confident about projecting what happens next for Google, but for Tesla, well, I don't really have any idea. Is the company well managed? Now, Elon Musk might be a rock star and a marketing genius, but does his management team know how to actually manage a company? Now, we obviously can't go meet the management team, but there are some telltale signs in the financials that tell us whether the management team are actually making some good decisions. So I check for cash deployed in investing activities for the business, return on equity, free cash flow, and I check if they've got a dividend. And I found for Tesla that they are completely unreliable. Check out their return on equity graph. As an investor, they are growing your money at minus 13%. Normally, I want to see it above 10%. And I'm talking positive 10%. And they, of course, have no dividend, which would obviously be crazy because they're not making any profit to share with their shareholders. So is Tesla a good company to invest in? So you might be thinking, how is this company worth any money at all? Why is the share price at $700 a share? Well, it's actually all about the potential. See, people love the story of Elon Musk and Tesla, and they believe in him. The insane media coverage that him and the company receive have hyped the company up to a valuation of $140 billion. But is it actually worth $140 billion? The brand is really powerful, I will give them that, and the products are good. But how much longer can they continually lose money for their investors, and when will they finally make that profit? Some people would have you believe that it is just guaranteed, and they'll say things like, oh, don't bet against Elon Musk. But for me, I don't think anything is guaranteed. So a valuation is actually impossible to calculate because I can't use the online calculator that I normally use because there are negative numbers and it'll give a negative fair value. So to even attempt to tell you the correct fair value would actually only be a guess. And that's exactly what the people who are buying Tesla stock, that's exactly what they're doing. They're just guessing. So I think the stock price is actually 100% hope and speculation. Look, I like Tesla. I like the vision, but as an investment, they are just completely unreliable. The upside is probably minimal. The downside is quite large. And I just don't understand why anyone would want to invest their hard-earned money into something that's so unpredictable and unreliable as the Tesla stock. Now, I'll say all this and the share price is probably going to now go to $2,000, but I promise it's all speculation. But it could just as easily go the other direction because there's really no financials backing the company's value up. It is definitely one of the most overhyped companies that I have ever had to analyze. But just because it is all speculation and hype doesn't mean that I would ever short the stock either. And it's for the exact same reason I wouldn't buy the stock in the first place. I have no idea if it's going to go up or down. And one day, I really do hope that Tesla is this big profitable powerhouse of a company. And just like other companies that have had their time in the sun, I really hope Tesla one day becomes this boring, stable company like Google. And then there will be this new shiny company that will take the limelight away from Tesla. But until then, I'll have to find something else to invest in. Now, I've spent about a day doing the analysis on Tesla, and I don't really follow the company very closely. So this is just for entertainment purposes. You've got to make your own choices and it's your own money. But I really hope you've enjoyed this analysis. And I know it's not always puppies and unicorns, but I will probably deny more companies than I ever approve. But that's how we get the best deal. So stay tuned for more videos like this where I hope to uncover a better investment. Please hit subscribe if you enjoy my analysis and I will see you in the next video.